Ladies and gentlemen, welcome to day 3, part 3 of our webinar series in September about getting ahead of your China numbers. The goal of this webinar series is for companies to realize the numbers behind the growth opportunities that exist in China and how to get ahead of those. One of the things that I see as a pain point for many companies that are looking to enter the Chinese market is ultimately that they don't get their numbers right. But then also once they are established in the Chinese market, they are actually not observing or analyzing the actual numbers that are being generated from the business locally. Numbers is an administrative function. It's a function that many salespeople, CEOs, that's not really, although it should be their focus, it's not maybe their strength. And as a result, it gets pushed behind. I'm trying to simplify the idea of numbers in China by creating this webinar series around how can you get your profits out? How can you get structured and organized that you create profit repatriation strategies? Yesterday, we were looking at financing options. Today, we're looking ultimately at tax planning and the taxes that are applicable to your company in terms of profits tax. Tomorrow, we're looking specifically at VAT. And then on Friday, an actual conundrum for many investors at the moment is how to get bank accounts opened up and actually operated. So before we start today's session, it's a small number of people on today, but for those of you that are watching on our YouTube channel, please do add in the comment section, who are you? What's your background? This always gives me a bit of an understanding of my audience. If you are a newbie to China, meaning you're here to learn, or if you're a startup in China, meaning you've transacted with the Chinese market and now you're looking to advance yourself into having an entity in China, or if you're an experienced China hand, just give me a heads up. What are you? Type it into the chat box, or if you're watching this on replay on the YouTube channel, then just type it in the comment section. How the webinar works is, again, I'm here to educate you and teach you on things to do with tax planning and tax benefits in China. If you've got any questions, there's no dumb question concerning numbers. So I just want to highlight that as well. Don't be shy to ask. That is what I'm here for. And we'll have a Q&A at the end of today's session. This is your time spent, so use it wisely. From a technical standpoint, we're using Zoom meeting. If you run into any technical issues, my only suggestion is log off, log back in. No, we are recording today's session, so you will get a link to our YouTube channel to review the recording later on as well. And if I run into any technical issues, it does take me about a minute or so to reboot. I will be coming back on to finish today's presentation, so bear with me if because of time restrictions you need to leave. Completely understand. Just know, again, we're recording, so you can look at the recording later on. Just again, a heads up, if you haven't registered for these two events, tomorrow we are speaking about value-added tax and how the golden tax system works. And then on Friday, we will be looking at the operations of the bank accounts. If you missed Monday and Tuesday sessions, those recordings are already up on our YouTube channel. The first one is how to get profits out, and the second one was all about financing and financing options and whether you have the financial resources to go into China. Like I said, that's up on our YouTube channel. You can also go to woodburnglobal.com/events to register for the next two events and also see what other events are up and coming. Who am I? I'm the only expert for this week. I don't have any guest speakers, but just a brief intro to who I am. My name's Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm 17 years in the Chinese market, solely working on inbound investment into China. What that means is that 100% of my clients are foreign investors that have all done some form of market entry into China. My speciality and expertise is in corporate services, administration, and ultimately creating a foundation, a solid foundation for your China business. We help clients at all stages of their entry, from pre-investment advisory to implementation to outsourcing solutions for accounts and tax and payroll. and ultimately advisory on scaling up. That is a roadblock for most foreign investors going into China, is how to scale up and grow at a faster speed than others have done in the past, right? My vision and my mission is to make sure that the clients I acquire now don't run into the same obstacles and roadblocks that I experienced in my own journey. What I've done to help these types of clients is create methodologies. In July, we did a webinar series all about these varieties of different methodologies, depending on what stage of development you are in China. So everything from how to incorporate your company, how to save your brand, all the way to how to choose the right accountant for your business, how to recruit and employ your first employees in China, these types of things. All of these recordings are up on our YouTube channel, so you can take a look there as well. So part 3 today is about preferential tax policies for foreign startups in China. And the one thing I'm going to ask all of you is, if you have been entering China and you've been going into the market, at what point do you believe you will be profitable? Now, I ask this because tax policies are only going to come into effect if you're profitable. So at what point do you envision yourself being profitable? All of my clients that are entering the Chinese market today are startups. That's point number 1, okay? Because you might have transacted in the past and you might be turning those transactions and filtering that through your new China company. But ultimately, when do you believe you're going to be profitable? Have you done, I mean, I hope you've all done a budget, but have you done a budget where you're also planning for your taxes? And what taxes might then be applicable to you? Is it going to be profits tax? Is it going to be VAT? Will there be customs duty? Will there be consumption tax? What will be applicable to your business and your business model? All right. So hopefully I'll answer some of those questions for you today. But most importantly, I hope that your takeaway will be that you've got to go back home and do some homework about your tax planning. Because we're going to go through an example of what it looks like for most new entrants into China in terms of when they first start paying profits tax. Okay, and I'm providing an ideal scenario. Many times it doesn't even work out like that. So let's look a bit at the tax system in China, all right? And we're going to first start with corporate taxes. So just in terms of definitions and terms, in China, there are 3 terms used for profits tax, which is corporate income tax, enterprise income tax, and profits tax. And generally, providers will use the abbreviation, so they'll say CIT, EIT, or PT. It's all the same thing, all means the same thing in China. It's the same profits tax, enterprise income tax, corporate income tax that you know in your own home jurisdictions. Rules. The rules are that the fiscal year in China is January to December. It's the calendar year. Corporate income tax, profits tax is paid quarterly. So declarations are done in April, July, October, and January of the following year. And then there is an annual corporate income tax filing declaration, which is April. I've put April here, but could also be May. Depends on where depends actually on when your tax officer dictates that the declaration has to be made. Sometimes they will say they need it by April. Sometimes they will say they need it by May. It's within that time frame. Okay. And of course, it's the following year based on the previous fiscal year. So this is just the basics around corporate income tax. Now, what corporate income tax is going to be applicable to you? This will depend on what is your net taxable income. It will depend on the type of business activity, business scope you have. It may also depend on the region that you've established your business in. All right. So I do want to go through this table with you to explain what that means. The standard corporate income tax rate in China is 25%. Okay, that's the standard. Now, small scale enterprises who've got Annual taxable incomes of less than 1 million will pay a 3% profits tax. Between 1 and 3 million, you will pay a 10% profits tax. And after 3 million, you will pay the 25% standard corporate income tax. Now, this regulation was actually implemented in 2019 to end by December 2021. But due to the pandemic, the government extended it on the 1st of January 2021 to end on the 31st of December 2022. The question then comes, what will happen from the 1st of January 2023? And there's no rumors, there's no information on this. It's a waiting game to see whether it will be further extended as a benefit to small scale enterprises, or whether it will be completely removed and the 25% will become applicable at that point in time. This is why tax planning is critical. High-tech enterprises, and I have used that as an example to show you what the criteria are to become a high-tech enterprise. The profits tax rate is at 15%. For technology advanced service enterprises, it is also 15%. For these two categories, there is an application procedure that occurs after you have established your company, where documents have to be submitted to the tax authorities to prove your status. All right, which means there is no guarantee that you obtain these statuses. Again, something I just want to highlight and emphasize. No guarantees. All right. Then you've got companies that are registered in certain regions. So I'm going to use Shanghai as an example, because that's probably one of the most popular ones, but you've got plenty of others. I've listed a couple here. You've also got the Western regions, places like Chengdu, Chongqing, where the rates are at 15% profits tax. Okay. Now, what I want to highlight again here is that you need to fall under certain criteria. It's not just that it's automatically that you've registered your company in Shanghai that you get 15%. You've got to follow the industry and the application procedure to obtain that 15%, which is why, again, it's not a guarantee. And I get frustrated because the government makes it seem like if you register your company in Shanghai, you get 15%. Okay, that's how they're doing their marketing. They're doing it on a very superficial level, which obviously does not help with any form of planning, because people make the assumption, oh, well, there's 15%. I'm going to take that. I'm just going to register in Shanghai. Depends on the industry that you are in. Okay. You've then also got special rates for key software production enterprises, i.e. you're setting up a manufacturing facility for software production, as well as IC design enterprises, and that's at 10%. But again, it is an application procedure, okay? And if you are engaged in pollution prevention and control, again, there is a special treatment of 15%, which is up till December 31st, 2021, and the question will be whether this gets extended or not. Now, I'm hoping that the way I'm explaining things from this slide, it shows you that there's never a guarantee on what you obtain as a profits tax rate. Everything beside the standard corporate income tax rate and the small scale enterprise, because that's based on actual figures, everything requires an application procedure, which happens after you've established your company, which makes it very difficult to plan for anything, because your assumption is you will be able to obtain it. Okay. Now, there are also many other avenues to obtain preferential tax rates. For example, there is a building in Shanghai called the Australia House, whereby it's called the Australia House because it was subsidized by the Australian government. The Australian Chamber of Commerce of Shanghai is located on the top floor. And all the remaining floors are actually operated by the property developer, which is Ankin Group. and they've got a very good relationship with the tax officers in Chunning district, where the building is located. And they have preferential tax policies where you can get profits tax rebates, VAT rebates, and individual income tax rebates of up to almost 50% based on the industry that you are in. Now, for example, I have clients who have decided on their own that they fall within the certain criteria, and they say we can provide proof that we do, but there's no guarantee that you will, right? And of course, the difficulty is that you cannot have a discussion with a tax officer prior to establishing your company, because you've no collateral to go to the tax officer. You can't say, hey, I want to have a discussion even before I've set up my company. Okay, they won't discuss with you. So this is where it becomes a vicious cycle on what to do. And there's no right or wrong here. Okay, we can make tax planning based on two scenarios. One is that you get these rates, and the other is if you don't get these rates, which is what a lot of companies don't do. They don't do this scenario building, which I think is so critical in the early stages because there is no guarantee. Now, here is an action plan. I've started straight off with an action plan for you guys. These are questions I want you to answer. When are you planning on being profitable in China? Will it be from day one, or will it be in year 5 or year 8 or year 3? When will you be profitable? Are you a high-tech enterprise? And just to backtrack on that question, of course you cannot guarantee anything yourself, but you've got to do some scenario planning. So if you are profitable in year 3, what does that mean? If you are profitable in year 5, what does that mean for your business? Okay. Are you a high-tech enterprise? And can you fulfill the criteria? Are you a technology advanced enterprise? Will you decide your tax planning based on location? Apart from that is many people choose location because of the actual physical location and the benefits it's going to offer them, and tax becomes a benefit. It's not because you've decided that location because of the tax. You should choose your location because you have the feeling that you have your long-term vision of being there and you have no intention of relocating. If you want advice on legal consequences of moving locations, check my previous webinars on that, because that's also drama in itself. Okay. Are you a production software company? Are you a clean tech organization? Are you planning to implement profit repatriation strategies? This was all about our webinar for Monday. If you are planning repatriation strategies, when are you planning to implement them, and how is that going to affect your profitability? Okay. So that's your action plan. Those are the decisions you have to make, okay, to make sure that when you are incorporating your company in China, you are creating a solid foundation with a vision and a plan. And you've developed a couple of different scenarios so that there's no shock. You know exactly where this is going to lead you, right? Now, I wanted to provide here an example for criteria for high new technology enterprises. What is that criteria? All right. So if you want to become, or if you are eligible to become a high new tech enterprise, then you will get a reduced corporate income tax rate of 15%. Okay. But there are 3 criteria you need to abide by. 1, that your core IP is owned by your Chinese company. Okay. And that you've owned that for at least 5 years, which means that you cannot fulfill you cannot complete this application until you've held that exclusive IP for 15 years. Then you've got to have 30% of your employees that have a certain diploma that is a higher degree, meaning that they've got MBAs, they've got a much higher educational certificate and level. 30% of your employees need to hold that. 30% of your employees in China. And then you've got to also account for that any R&D expense will be reduced from 6 to 5% of the annual revenue. Okay. Now, you can see already with these types of criteria that small, medium-sized companies may not be able to benefit from this. All right, because they're going to start off with one employee. So you got to make sure then that one employee holds that degree, but will you get an application approved if you've only got one employee? Probably not. I have a client who established their business in Shenzhen, and they were in the clean tech sector, clean high tech sector. We did the application for the HNTE, but the following arose. One, the IP was not owned by the Chinese company, and it was never going to be owned by the Chinese company. And at the point of application, the Chinese company did not have a licensing arrangement yet. On top of that, the Swiss company that owns the IP was not willing to provide exclusivity just yet. Then they only had 2 people on the ground, and no R&D was done on the ground. All the R&D was done in Switzerland. So as a consequence, they were not able to receive this approval. They did not obtain the 15% corporate income tax rate, and they were stuck with the 25%, which again, because they had not done scenario development, the scenario planning, that was not within their budget. And it was a shock to the system from everyone, from the Swiss shareholder all the way down to the general manager locally. So be aware that these applications are not easy. The criteria are difficult. And you have to imagine what the incentive is for the tax officer. The tax officer does not want to give people special rates because it means that their bureau will not be earning the higher tax revenue levels that they need to earn. So what's the incentive of the tax officer to actually grant you this, right? They're really only going to grant it if you truly abide by the criteria. And if you don't, well, you don't get it. There's no under table business that can happen there, because the goal of every tax officer is to earn as much tax revenue as possible so that that tax bureau reaches its tax KPIs, tax revenue KPIs that are set for them. So again, what's the incentive for? Not much. So they will make it difficult for you when you are doing these applications. And the same goes for any of the other applications, whether you're doing things by location, whether you're doing things by industry or sector, okay? And just to highlight here, this is generally the types of industries that the government is saying falls as a high new tech industry. Cloud computing technology, mobile internet, encryption technology, e-commerce, modern logistics, inspection certification, standardized services, technologies for culture and creative industries, alert emergency solutions, natural disaster monitoring. So actually, clean tech is not under this. Okay. Now, again, it would be good to have an understanding of, prior to the investment, what it means, but more importantly, do scenario planning. If you don't get these special rates, what does it look like for your business? And how would you have to pivot or adapt it to then create the profitability that you need in China? What is annual taxable income in China? Pretty much the same as anywhere else, but just to highlight, you've got your total income known as gross income. You minus any of the deductions or exemptions that are allowed in that tax year, and you come out with your taxable income. Okay. Who is considered a tax resident? What I want to emphasize here is that there's 2 things that relate, and I'm simplifying it, okay? One is you've established a company in China. And number 2 is you've established or you have effective management that is based in China. Or you have a situation where you've created permanent establishment by having people on the ground that are staying for extended periods of time, meaning that you know, it's creating a permanent, it's almost feels like it is a permanent establishment in China, even though you don't have an entity. And those people are either freelance workers, Chinese freelance workers, or expats, foreigners that have been seconded there for short periods of time, but that short period is maybe 8-9 months. And as a consequence, it creates this permanent establishment. So you've got three differences. One is you've established a company. The decisions, the effective management is occurring in China for your businesses globally. Or number three, you've created a permanent establishment with no entity, but people working on the ground, fulfilling projects, and they've overstayed the allowable time frame. And generally that allowable time frame would be 183 days in a calendar year, in the fiscal year. Okay, so I've summarized these two slides for you in terms of those three items. Then I want to look at the main, I mean, this is a bit of a technical piece to the puzzle, but I do want to show you here what are the allowable deductions and tax credits that are on offer for companies in China. Okay, so generally, all documented expenses, costs, and losses in generating taxable income are deductible. I just want to emphasize here, documented, meaning if you don't have the FAPIAOs, contracts, and papers, there's no deductions. Okay. So there are limits to certain categories, and those categories are entertainment expenses, advertising expenses, and donations. Now, as you can imagine, and this is why I emphasize documented expenses, with entertainment expenses, sometimes you don't always get the FAPIAOs. But you can do deductions of up to 60% of that, advertising as well, and donations as well, particularly if you have donated during COVID. Non-deductible items include dividends, management fees, profits tax that's been paid, and late tax payment surcharges. Okay. Again, this is all pretty much technical aspects in relation to the tax side of things. Deductions are allowed for amortized intangible assets, so patents, trademarks, copyrights, land use rights, and they can be amortized over a period of 10 years. Organizational and startup expenses are also tax deductible in the first year of activity. Interest on loans are also tax deductible. And if you hire handicapped staff, then 200% of their salary expenses are also deductible. R&D expenses are also tax deductible as an incentive up to the end of last year, but this has also been extended. I should have written 2021, also extended till the end of this year. And tax losses can normally be carried forward for a maximum of 5 years. In 2020, the year 2020 can be carried forward for 8 years. All right. So if there are tax losses that were incurred in 2020, this will be carried forward for 8 years. All the other years are carried forward for 5 years. And as I mentioned, you do have preferential tax treatments based on the industry sector that you might be in, whether you are in special economic zones like Shanghai, or whether you're in pilot free trade zones. And exemptions may be applicable also to things that I hadn't mentioned earlier, like agricultural businesses, forestry, fishery, and overall environmental technology companies as well. Other types of taxes that are applicable, that could be applicable to your company are real estate tax. If you are, this is particularly pertaining to those companies that manufacture in China and might purchase land. So you've got associated with that, you would have real estate tax, deed tax, urban and township land use tax, and then obviously land depreciation taxes, etc. Stamp duty taxes are applicable to everybody, and they are levied off of all of your specific legal contracts, whether that be rental contracts, service contracts, trade agreements, whatever it might be that you have to run your business. Then obviously you've got social insurance schemes that are applicable and need to be thought about for everybody. You've also got urban construction and maintenance tax. We call that a surtax, which is applicable on VAT and consumption tax. So you take your VAT payable and you add this urban construction and maintenance tax on top of that VAT that is payable. So whenever you see an invoice from somebody, you will always see VAT and surtax. That surtax is this urban construction and maintenance tax. Then you've got motor vehicle acquisition tax if you own vehicles within your own organization. You will have taxes also, lower tax rates based on entertainment and advertising businesses, on national resources. One thing I didn't mention is actually the consumption tax, which will be applicable if you are trading in luxury products. So cigarettes, cigars, alcoholic beverages, that includes wines, liquors, etc., cosmetics. You'll have the consumption taxes that are applicable there. And then you've also got the environmental protection tax, which is predominantly imposed on manufacturing companies as well. So we are going to start now on, for me, what is the exciting part of this webinar, which is all about the tax planning side, which is when will you be profitable in China? Okay. And I've created a scenario. I've done a scenario based on a 5-year tax planning. And I've just created the trend that I see with my small, medium-sized companies. Okay. Now, this is the scenario. In year 1, you have had your business license issued in March 2021. Okay. You've got registered capital, which is the working capital of $100,000 US. So I've just done an exchange rate of 656,300 RMB. This capital, this registered capital, as I highlighted in yesterday's webinar, is the capital that will be used to fund all of your local expenses. So salary, rent, purchasing raw materials, marketing, advertising costs, travel expenses, all of that. Okay. Now, in year 1, which is now 2021, you need to make a decision. Do you need to repay your shareholder for all of the upfront costs that were paid by them for the setup of the company? That means things like the rental deposit to the landlord, things like your professional service fees. If you are paying a lawyer, an advisor, a corporate service provider to do the incorporation, do you need to repay those fees? There is no right or wrong here. It just comes down to how you're managing your finances between the head office and the Chinese subsidiary. Whether you want all of these upfront costs to be booked within the Chinese company, and then you're using that registered capital to pay back those upfront costs. Like I said earlier, all startup and operational costs are considered a deduction, right? So that's one of the advantages of putting it in your China books. All right. The issue is that you're paying money over and you're paying money back. So you've got remittance fees and you have to go through all the hassle with the banks about doing outbound payments. And then the question is, does the head office really care? Will they just maintain that within their own books? So there's, again, no right or wrong. It comes down to the communication between the head office and the Chinese subsidiary on what is the strategy there about these upfront costs that were initially paid from the shareholder. And how should they be booked in the head office accounts and in the China accounts? That should be decided in year 1, not later on. Then in year 2, because there's a lot that has to happen post-registration. So basically, once your business license is issued from March, we are using the time frame March to December to create that foundation of your ERP system, your accounting system. that we haven't spoken about profit repatriation strategies, because I would lead that on to January 2022. Okay. January 2022, so really 8-9 months after establishment, we are starting to see whether revenue is being generated or not. We're starting to have that ERP system running. We can start thinking about profit repatriation strategies. So creating trademark licensing arrangements, management fee arrangements. Have we thought about transfer pricing arrangements? We are drafting these service agreements. We're formulating or creating the formulas on how to calculate the service fees applicable to these arrangements. We are looking at transfer pricing and how it should be applicable to these service agreements. Okay. Now, as I highlighted on Monday's webinar, it takes approximately 3 to 6 months to get these arrangements, these service agreements, approved by the tax authorities. So it takes time. So do that straight away, right? And when I say straight away, don't do it straight away from the day that your business license was issued, because there's so much that has to happen from an ERP system, accounting, and getting all of that built up, to also then hiring employees and getting your business started off the ground, that it's good to look at it from the new year and start getting those applications put in and getting those arrangements set up. Okay, and having those arrangements be open-ended, so that once the agreement is registered, it's registered. And like I said, amendments can always be made. It's just that they have to be approved by the tax authorities. Now, in this scenario, working capital, i.e. the registered capital, has been used from March 2021 to March 2022 to grow headcount, pay for rental charges, pay for professional service fees, and pay for any other expenses that you might be incurring. Paying for the ERP system or accounting software system, or potentially buying equipment, or potentially buying raw materials, or potentially buying supplies from your head office. Whatever it might be, you are using those funds. That is 12 months worth of, let me go back to the previous slide, 656,300 renminbi. Okay. It runs out fast, my friends. I'm not joking there. It can run out like that. Oh, I haven't even mentioned marketing initiatives, marketing campaigns to build up your brand and your reputation. It is like water flowing away. Okay. So you can imagine that within 12 months, and by March 2022, 12 months later, it's almost running out. Okay, so what do you do? Well, hopefully by that time, the China company begins invoicing either locally to customers, or it starts invoicing for service fees to the head office, so that it starts generating revenue. Okay. But you can imagine that those invoices are not going to be large amounts. And it also might not be that you are invoicing every single month. You will probably have a roller coaster situation where there's constant fluctuation. Okay. But the idea is that revenue is trickling in, because your registered capital is running out. You're almost at the end of it. You're starting to invoice in order to be able to trickle funds in to sustain the business. Now, if you're not doing that, if you're not planning on generating revenue, does this mean that the registered capital needs to be increased to fund the business? Remember that if you increase the registered capital, your liability increases. Does it mean that the foreign debt loan, which is the difference between the registered capital and total investment, will be transferred? In that case, have you calculated the time it takes to open up the foreign, the debt, the loan account at your bank? Normally it takes 30 working days, if not longer. Or are you creating service agreements with your head office, like I mentioned earlier, to generate this income that's flowing in? Okay. And again, when you create these service agreements, there has to be truth and validity to them. So make sure you're looking at the staff that are on the ground, and understanding what's, what's being done by the head office, what's being done by the local office to generate business. Okay, my goal there is just to say, get advice so that you're generating the right agreements according to what you're doing right there and then. Then you're going into, so this is now year 3, we're in 2023. Revenue is still not enough to sustain the local operation, okay? Because ultimately you are increasing your expenditure. And again, I'm hoping that you're doing your budgeting year on year. But you have to imagine in your startup phase, revenue is low, but expenditure either remains stable or goes up because you want to increase your marketing awareness, brand awareness, your costs are starting to go up. As your revenue starts slowly increasing, you might need to develop more headcount. It's a balancing game, guys. It's always a balancing game. Okay. But the goal is that we keep consistency and we maintain the momentum so that we continue to scale up. That is where it is the magic of your startup phase. And this is why I emphasize so much on numbers, because the biggest downfall of most foreign investors in China is lack of cash, because they're not keeping this balance. Okay. So revenue is not increasing. You're already in your 3rd year of operation. And the question is, you're not generating enough revenue. You're continuing to invoice your foreign company for funds to pay off your expenses. You may also decide at that point to increase your registered capital or use your foreign debt loan. But the biggest question is, if revenue is not coming in, should you decide to step back and cut down on your expenses, eliminate headcount, downsize office space? Okay. And again, in this scenario, which I want to emphasize happens to most of my clients, we are in year 3 and we're still not profitable, which means that the education I've given you at the beginning of this presentation is not valid yet. You're not declaring, you're declaring profits tax, but it's 0. There's no rate that's applicable because you're not profitable yet. Okay, you're already in year 2023. All right. Now we start year 4. So we're in 2024. We're praying that by 2024, revenue is almost at a level to cover all of your expenses. Okay, because you're generating the business. But again, it's probably not so stable that there are still fluctuations month to month. Okay. And what that means is, because in China, profits tax is declared on a quarterly basis, you've got to understand whether you've got enough cash on a quarterly basis to fund the operation for its profits tax if in that month you're successful. Maybe in the next 2 months you're not, so no profits tax is declared. Declaration always happens, but no taxes are paid. You're going to have that fluctuation, and you've got to make sure that you've got enough funds in your account to pay that profit tax in case of need. But at this point, you might have a little bit of money laying around. And the question at that point is, what do you do with that excess? Do you keep it on the ground as safety? Or do you start repatriating? Again, it's a balancing game. And I just want to emphasize, this is where, again, companies do not, or leaders and managers are not proactive with their Chinese accountants to go through these types of discussions to really analyze the numbers month to month, quarter to quarter, to know exactly when to keep funds on the ground and when to repatriate. The startup phase is a balancing act. And we need to make sure that we cover ourselves. Of course, we can always increase capital. We can always send over the foreign debt loan. We can always create service invoices that hopefully are true and valid to receive funds to pay for the business. But how does that make you self-sufficient? Right? And I just want to say, at some point, the head office will get fed up. Now, if your business model is that China should just be a cost center, and it will one client it will have as the head office. Hey, that's your business model, but that needs to be planned out from the beginning. Okay. So it depends on what business model you're creating, how you're actually, what your goals are in the market in terms of generating revenue, who will that be who will be that client or clients for you, where will they be in China, will they be overseas, etc. But it is a true balancing act to say, do we at this point, because we've got a bit of excess, repatriate or don't we? Do we want to have a safety? Decisions also have to be made quickly, guys. Okay. The advantage here, obviously, is that if you do repatriate, your contract, which you actually went through the approval process in 2022, is valid. You issue the invoice, you go through, as I mentioned on Monday, the tax procedures, the bank procedures, and you can repatriate. It's done. The question is, should you or shouldn't you? Should you be keeping those funds on the ground or not? Year 4, there are still more questions that are raised, or that I tend to raise with my clients, are things like, does the shareholder require reimbursements to be made for startup costs or expenses because you didn't do that at the get-go? Or should management fees start being implemented? Should the trademark licensing arrangements start to be initiated because you're starting to generate revenue locally, and your trademark licensing arrangement says that for every sale that's occurred, there will be a 5% licensing, 5% royalty fee to be paid. It depends on how you've done these arrangements, guys. Okay, but these are the things that you have to start analyzing day by day, month by month, quarter by quarter. Now we're at 2025. Okay, and hopefully, and this is a goal that I have for all of my clients, is that by year 5, you are self-sufficient. Okay, and again, it will depend on the business model. It will depend on client relationships. It will depend if there was a pandemic or not. It will depend on a lot of things, but we have to have goals. And one of my goals for my clients is that in year 5, their revenue covers the expenses and repatriation strategies are implemented. And some tax is being paid because we want to avoid suspicion from the tax authorities. Generally, by year 5, the tax authorities will question why you're not making profit. If you're not making profit, why are you staying in the market? Why are you not exiting? Because, you know, usually after 5 years, you know whether China is for you or not. They might question, if you're not making profit, are you evading taxes in some shape or form? Is the profit being made somewhere else? So this is why one of my goals is by 2025 or by year 5, we want to show that some profit is being made. Okay. Even when the profit repatriation strategies are in place. Now, the big question is, in 2025, what will be the tax rates in China, guys? I've given you the table for today. What are the tax rates today? What will they be in 2025? I don't think anybody can answer you on that, because there is so much change in China. So when you're doing your tax planning and you're looking at these tables, and this is really what I get a lot of companies who say, whoa, Christina, those tax rates, they're fantastic, fantastic. And I want to be in Shanghai because of that. Or I want to apply for the HNT status because look at that 15% rate. Or I want to do this, I want to do that. And I stand back and I'm like, well, first of all, let's take a step back. When are you actually going to be profitable? What are the tax rates going to be in that year? And then let's analyze where you should be and where your business should be. Let's not base the business on where you're going to get special tax rates. That's where I get frustrated. Okay. So again, we don't know in 2025 what's going to be. We don't know if the small scale enterprise tax rates will be still applicable, because like I said, that should end at the end of 2022. Who knows what will happen after that? There are no rumors yet on the rumor mill. We don't know if locations will update their taxes coming out of this pandemic. I don't believe so. But in 2025, I don't know. Nobody can actually tell you. So I want that in year 5, people start paying taxes, but to tell you what rate that's going to be, I cannot tell you. Nobody can. Okay. The goal, however, is that we want to minimize your tax exposure with a clean business that is not causing suspicions with the tax authorities. And that one of the scenarios is just to keep in mind, worst case, we're going to pay a 25% profits tax, because that's the standard rate that won't change. Well, I don't know if that won't change, but currently 25% has been the rate for the last 10 years. So my assumption is it will stay in that range. Might go a couple percentage points down, maybe up, but it's not going to be drastic. All right. So let's use that as a standard. But all the other benefits, I don't know. Couldn't tell you. So the goal is that by year 5, right, we are making profit. We have installed profit repatriation strategies that make sense for the business. And we've implemented and we're invoicing for those repatriation strategies. The beauty of it is we've got excess, so we've got to pay profits tax. And again, it may be a fluctuation that one quarter you pay, the next quarter you don't, and then you look at the whole year and maybe actually you've got a credit from the tax authorities because you paid a little bit too much, or you still owe a little bit more, right? It just depends on how the whole fiscal year has turned out. The goal, though, is to minimize your tax exposure as much as possible without evading taxes and without creating suspicion with the tax authorities. But for me to tell you what tax rate there will be in 2025, impossible. Right? And your business might also, within 5 years, change so drastically that at that point, maybe you can apply for the HNT status, or you can apply for the software control, software production, because now you're starting to produce in China. Again, it all comes down to your planning. But what I've learned during 2020 is that companies can pivot in any direction possible, and suddenly new things will pop up for their organization. Okay, so the goal is we want to optimize our structures. We don't want to evade taxes. We want to have a clean structure where we avoid any suspicions from the tax authorities. And ultimately, our goal is that we have everything planned out in a scenario format. So we have the scenario outlined that we might be paying 25% profits tax. We have the scenario outlined that we can get approval for the HNT status. We pay 15%. We might get approval that we're in Shanghai. We fall under the industry categories. We get approval, it's 15%. We're small scale enterprise. So actually our revenue, our taxable income is less than 3 million. So maybe we're paying 3 or 10%. We can optimize our structures in this way at that moment in time, but to predict what tax rates will be is extremely difficult in China. And the goal that I want is that people don't evade taxes. They don't create fake agreements that get them into trouble later on. We just really want to have a clean structure. We have consistency, we've got momentum, we've got a great relationship with the tax officers, and we're just abiding by the regulations. Okay. Now, is tax planning even possible if the regulations are consistently changing in China? Yes, the answer is yes, it is possible, but having to do it in a scenario format. If it's this rate, what does our P&L look like? If it's at this rate, what does our P&L look like? Creating the scenario format and telling the board of directors, you know, our goal is to get XYZ status, or we believe we're going to be a small scale enterprise, or whatever it will be, saying hope to have achieved this. If we don't, because we can't fulfill the criteria, then the scenario will be looking like this. And then because the scenario looks like this, we need to pivot our plan and our strategy to make sure we get the same end results. Again, it's a balancing act, guys. So that's the end of today's presentation, short and sweet. I didn't want to go into too much of the technical side of things on how things operate, because again, I don't really know at what stages you are all at. But now is the opportunity to start typing away your questions. A couple of people arrived late, so just know we are recording today's session, and you can look at the full recording up on our YouTube channel later on today. But it would be wonderful to know what your biggest takeaway was from today. And again, just how you can work with us. We do everything from budget creation validation, where we sit with you, to the tax advisory, implementation of the ERP systems, outsourcing solutions, and we can tailor make a lot of our services to your needs and what you might need at that certain point in time as well. If you're interested in booking a session with me, these are my details. I'm just going to put them quickly into the chat box so everybody has them. One moment. There we go. And 1 second. And just to remember that we've got 2 more sessions this week. Tomorrow we're going to be talking about VAT, golden tax system, and on Friday about how to operate your China bank account and how that looks. So now, oh, and if you want to register, you just go to woodburnglobal.com/events. I'll type that in as well to make your life easier. There we go. It's also in the chat. So I want to use this time for any Q&As. If you do have any questions, please go ahead and type them in. If you don't have any questions, you guys can log off. No problem whatsoever. And I hope you have a great day. Nothing's popped in so far. So I will hang around for a couple of minutes, but if nothing's popped in, then we can end today's session. And I appreciate everyone joining me, and I hope to see you in the next 2 sessions about VAT and banks. And I hope you had I hope you took something away from today. Have a great afternoon, everyone, and hope to see you soon. Take care and goodbye.